Okay, let's go ahead and get started. Give me an audio check. Let me know if you guys can hear me. We'll look at broad markets and individual stock picks you guys want me to look at. Hopefully everyone's having a good start to their Labor Day weekend. Markets are closed on Monday, so we will pick things back up on Tuesday after this live stream. So I know I have one guy wants me to look at how we ended on Friday, so we'll go ahead and look at that. We have this is what I've got. All right, I'm looking at the daily chart here. There's a potential bull flag. I mean, that they're definitely showing that right here. I mean, it's got to move soon for that to be the case. But there's like a big old flagpole, and then you got this sideways chop action. The volume's not really decreasing though. Typically, what you want to see. This is why I don't think it's a bull flag, but usually on a bull flag, what you want to see is surging volume on the move up, and then you want to see receding volume on the flag. So like right there, you'd want to see volume kind of dropping, and then you'd want to see surging volume again for the continuation of the flagpole. And if that happened, then you take kind of the measured move of the flag, and you take it like that, and you can measure it out, and that will give you a rough target. And I have to go away. I have to almost squish my chart. It put me up at like 530-ish on the triple Qs for that flag move. However, the volume doesn't really look like that it is going to be a bull flag. I mean, look, you've got a move up here, but I've got volume basically dropping off, especially towards the top, just dead volume down there. That's like half-day volume. So that doesn't really give me an indication of strong market momentum that's about to continue, because that's kind of what a flag is you've got big, strong market momentum, and then you've got, profit takers and things like that when you flag out, and then the continuation. We don't have that. The volume's just not really doing that. And then on this flag here, I mean, volume wasn't really dropping off. It almost like increasing, or we'll just say flat, but not really dropping off. So, the structure of the price is there for the bull flag, but the volume's not really telling us that that's what it is. So that's it on the bull flag. Could be, but if I go down to, let's go down to the 15-minute, because then I can look at the kind of Friday's price action. All right, so here's what I've got. I had some trend lines. I've kind of done a little cleanup this morning on the triple Qs, but this looks good to me for a trend line on the 15-minute. All right, you got resistance, resistance, and resistance. We're basically right there, and I could probably just even adjust this to like there. It closed on Friday pretty much at resistance. I think the after hours, it was like back down below, right there. So not a breakout, really a close at resistance on Friday is what I have. So we'll see. It's at resistance, closed that there on Friday. So I suspect a pullback on Tuesday, because we're at resistance. Could break out, but we'll see. And then if I look at the futures, and again, usually the futures is almost better to chart just because it's continuous, whereas the triple Qs has the gaps. The futures doesn't always have nearly as many gaps. So align your triple Qs charting up with the futures so that you can kind of get a good read on where things are gonna, kind of where they're at. And this is what I have on the NASDAQ futures 15-minute chart. Resistance, resistance. There's another reaction, and you can see that this is why I said triple Qs is basically at resistance, because the NASDAQ futures closed right there at resistance on the 15-minute. Okay, so did they pop it and break out? If they do, then we can go up to some upper levels. Otherwise, we get rejected here at resistance. Until resistance is broken, you have to treat it as, it's not a level you want to go long at. All right. If anything, you want to short with a stop slightly above. Nothing says it can't be broken, but as of right now, it's not broken. And if you basically, look, if you traded resistance here, it went down. Now we are the fourth tag of that now. So maybe they want to break it out, but we have to see it, and then we'll just react. And we go to the let me go back to the triple Qs. Okay, so basically closing at resistance. Let me look at this. Really, the daily chart. Okay, there's also a gap to fill right here on the daily. You see that? So maybe they want to pop it up and fill that gap. All right, that's probably where that's the farthest I'd be willing to let that thing go. But in general, like I think if they pop this resistance right here on Tuesday, I'll probably just cover my shorts again. Again, it's been pretty choppy. It's jumped up, gap down. Most of the price action, at least on the bullish side, a lot of it last week happened in the overnight session. So, we'd wake up to a gap ups and then they'd sell it down in the regular market. So it's not necessarily bullish when the up move is happening in the after hours. But again, if they pop this, they can go fill this gap. It's about 493.23. That's about as far as I'd be willing to give it. If I was short, I don't know if I want to ride that out. I'll probably personally just cover and look to re-short it up at that level. I don't want to go long. If we start to break above that level, then yeah, you could look at a long because they're probably going to take out the all-time highs and push higher. But that's about a 3.5% move up to fill that gap. If they did that, if they did it soon too, you'd go like this, boom, fill the gap. You would have negative divergence on the daily chart. It would remain most likely. It'd go like this, boom, and you put in a lower high. So likely that would get sold into. All right. And again, if they break it out to new highs, you're likely going to get sold into as long as the divergence remains. If they take out the divergence, that changes the technical posture, and that tells you, okay, there is no divergence, and you want to look to buy dips. But right now, with the divergence, from my perspective, it's more selling rips is what the better trade is. You also have this bearish engulfing here on the daily, so that really shouldn't get taken out with the daily close above. If you get a daily close above that, then you negate that as a bearish engulfing. So on the bullish side, what I would say is probably a possible. Everything's possible, but I would say on the bullish side, if they break out from Friday's close, they go fill the gap. Maybe they want to pop this intraday, this bearish engulfing, because when you get really close, it's a pretty obvious move to run stops. There's a bunch of stops, short sellers and stuff have stops set just above that bearish engulfing. So if you pop it, you can run a bunch of stops, generate liquidity, and take large positions. Big institutions need liquidity if they want to take a large position, billions of dollars or whatever they're going to trade. They need sellers, right? So, or they need buyers. In this case, if you want to be short, you need a bunch of wave of people coming in to want to buy. So anyways, the intraday pop is possible. I could see that happening. A daily close does do some damage to the bear case, essentially. Now, if there's negative divergence, you still have a bear case. But personally, you get a daily close above, it means that this is not a top, and it could run a little bit more. You could get like a short squeeze. So that's what I have. Otherwise, we get rejected right around current levels because we are at resistance. And let me go back down to the hourly. And we fill, at a minimum, there's this gap to fill. I've got it circled. I got to kind of clean my chart up as I go. Right there. There's the gap at 463.85. I'm kind of leaning towards, at a minimum, filling that gap. If we're going to get that move up and maybe fill that gap above, or maybe even get that that kind of intraday break above that bearish engulfing where we run a bunch of stops, then I kind of feel like they're going to come down and fill this gap first. But they don't have to. That gap will most likely get filled, whether it's now or they run up and then come down. That would be some support. The buyers should be sitting there. I mean, everybody sees that gap. So 463, 55. You know, and the way I treat it is as we drop down, if we get close, I exit my positions. Anytime we approach, if I can see it and it makes sense, and I don't think we're going to just plunge right through that support, then as we approach support levels, then I will, cover shorts, and then I'll just retake those short positions if you break through those supports. All right. So, because you're giving up a little bit of a range, obviously, if you break through, but, reactions are likely. So, all right. So that's what I have on the triple Qs. SPY, kind of look at that one. Then we'll move on. The SPY, so, well, let's go to the 15-minute, I guess, just to kind of narrow down Friday's price action. Yeah, SPY kind of looks like it's range bound, basically. I don't have it marked out, but this is, there's your is that the all-time high? I think that's the all-time high. And then, it looks like SPY is kind of getting checked roughly in here. 3 reactions, basically, closing there. I'd say SPY looks like it's kind of range bound, closing at resistance right there. And then the bottom, this is just a short-term trend line. I'd probably move the bottom right down to there and go with that as our range. And we are, sell down, rally up, grind. A lot of chop last week. Last week was basically just chop. Tight range, hitting, rally up. Okay, so maybe that, or they break it out. But it hasn't broke out as of yet. And then if you look at the futures, the ES 15-minute chart, I have that one marked out. So that looks like resistance, 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 closing right at resistance. So that's really all that was going on last week, was just kind of low volume, chop. It makes sense. It's a holiday. It was a holiday week. There's not usually going to be huge moves because a lot of the big institutional trading firms, trading desks that have the big money, they're all out on vacation. They'll come back next week or maybe even the week after, because next week doesn't start till Tuesday. But, school starting for a lot of their kids and stuff. So they'll all start kind of trickling back. And Tuesday will probably be kind of more chop day, and then maybe towards the back half of the week we'll see some actual sustainable moves. But that's what I have on the 15-minute chart for ES. So that's what I got. That's my read on the markets right now. So let's go ahead and move on into, and the other thing you want to look at Nvidia, because that was kind of the thing in play last week, was Nvidia, just given that it was, it had earnings. We're pretty much, I believe, done with earnings season for the most part. At least there'll be small plays going on, but the big movers, they're all out of the way. So now the market can do what it wants. We don't have to wait around for some big market surprise, market surprising earnings report. All right, so Nvidia on the daily, there's a downtrend line here. All right, we got that. And that's it. There is a downtrend line. If they pop the trend line, probably going to go pop the highs. You do have a bearish engulfing though, so what I would suspect is if they pop this downtrend line, they'll push it up and make an intraday pop. But I'm counting on that bearish engulfing holding. It doesn't have to, because a bearish engulfing can often signal like a correction, and we did get it. I mean, you think about it, from this bearish engulfing from the high, Nvidia fell 34%. So it's kind of already played out. It doesn't have to stay as like as a top now because you did get the move. I mean, it signaled a reversal. You got the reversal. So at that point, you know, we don't have to count on it completely, but I think it's still tradable, which means that if you popped above here and maybe you get an intraday pop, what I'd probably want to do is just wait for the failure, wait for the rejection, then you could reshort it. You know, you pop above there, you're going to run a bunch of stops. I don't think it makes sense to just jump in short when you're popping and breaking out above a high. But if you break out and then you fail, that's your signal. So I would just wait for that. That's the safe play. And of course, make sure that negative divergence is there. You always, want to do that. If you don't have negative divergence and it's breaking out, it's probably going to hold. So again, you want to build a case if you want to short this thing. As of right now, it looks like it's kind of just like there's some support right here, 118.30. I can see on the daily they were kind of holding that. There's some reactions. There's resistance, and they basically closed right around support. So, watch this one Tuesday. If they pump this thing and it gaps up or it's moving, then you're probably going to see some of those breakouts in those short-term ranges on the 15-minute chart in the triple Qs and the SPY, and maybe that scenario that I talked about, filling that gap might be in play. That's it. That's basically it on the the big players. Yeah, I don't really see much going on. Yeah. All right. So moving on to your guys' stuff. UNDG. All right. So Unity is not really. I did point that out. It's still in play. I mean, it's still. You just have to give it some room. I mean, this one. Look, resistance. That was about it. You have those reactions. And then breakout, and it's been backtesting. The last two, backtest. So it's holding. I mean, look, once it hits that, you can see there's some buyers there. They're bidding it up off that support level. So it's objective to go long on backtests of support, and that's exactly what those are. And you have bullish divergence. You had it. You're coming off a divergent low, right? Man, I tell you, sometimes drawing this. So there it is, and this is your divergent low. So I got a breakout and a back test. I think it should run. To me, it looks like it wants to, push higher. Resistance right here, about 1842. Next level, I've got about 2234. And then you got the 200 day. So those are the three levels. I wouldn't expect it to get above the 200 day, but I could see a test of the 200 day. Okay, somewhere. So I still like it as a long trade, although, they were crushing it back down last week on support. But it's a low volume week. So, now when we move forward, we start getting the big players back, take note of the price action. That's much more important. The price action like next week and the following week is much more important than the price action of this last algo driven, low volume vacation trading. So if you see, a big green candle, especially if you have some volume behind it, then that's going to tell you that, this is likely in play. The Dollar General, this one got smoked on earnings. I don't know. I wouldn't touch it. This thing's deeply entrenched in a bear market. And, right after earnings, I don't, there's no indication of a bottom right now, okay? Usually you have to build a bottom. It's going to take a little while. So this is in a downtrend and, getting smoked on earnings. I don't see any real support. I mean, yeah, there's potential day trades or, little bounce trades, maybe some support, coming up soon, but I would just let this develop a little bit more. You don't have any bullish divergence on the daily. I mean, you probably have it on the hourly. Usually you get it right after big moves. See, look at the PPO. You don't even have it quite yet. So I think this has to develop some more, and I just give this thing some time. Here's the thing. The psychology of this, the way I think about this is, you had bulls, right? There's always bulls. There's always longs in a trade. So you had people that were like, oh, they're going to come out with good earnings, or they just saw this as being a good value play or whatever. So, or maybe they're paying a dividend. I don't know. Let me look. Yeah, they're paying a dividend. So you have those people. And so they're long, right? And then they didn't get out, and earnings came out, and boom, they're smoked, right? They're trapped into the trade. So now they never really had an opportunity to get out unless they were just, unless they had some stop losses and it was triggered. But there's a lot of people that it happened so fast because it just gapped out on earnings. They're not going to just instantly rush out. They're going to try to, they're going to say, oh, it'll come back, or, they don't want to panic. So they're in that trade, and they're deeply into losses. So what happens is, to wash out this stock, you got to get those people out too. And the way you do that is by keep dropping this thing lower. The big initial move, they said, okay, it'll sit back. We'll give it some time. And as it keeps going lower, then they get really anxious because they're already deep in the losses. And as it mounts and mounts and mounts, they'll start, okay, now I have to get out. Boom. That's when you get the washout move, and that's when you can get a bottom. So that's what I would look for. IWM is mostly financials, but so on this one, I marked this trend line. Let me see what this one. See, I had this hourly trend line. We had several reactions. We're kind of below it, so yeah, I think we're probably going to come down. It could backtest again. I don't have a good read on it because, again, the volume and stuff last week was just not isn't going to give me a clear picture. But maybe we backtest, and I think we're going to reject. We're starting to put in negative divergence on the hourly, and there's the PPO divergence. Well, you don't really have PPO divergence, so maybe they want to pop up and then put that in. And then you probably want to look at the XLF, and KRE is a good one too. So the XLF, this has just been moving higher on the daily chart. Let me go down to the hourly. So hourly chart, we'll mark that out. I mean, really, that's the better trend line because I think you got more reactions there. So drifting higher, and momentum is, less. So divergence on the hourly, no sell signal though. So I think you got to break that trend line. You have divergence, so this could easily come out next week and boom, they smash it down. And that's the way I'm leaning. I think this thing kind of drifted up. Look at the volume. Look at the volume right here. Just anemic. This thing's moving up on basically fumes. There's no real buying volume. It's short covering most likely. And there's always less shorts in a trade. Typically, stocks always have way less shorts. So to see really low volume like that doesn't say there's big buying volume. It just says those few shorts that are in it are covering. And that's the trickle buy. So I'd be looking for a sell on this. It's just not there yet. We need a sell signal. We need a big red impulsive breakdown candle. I thought we had one in JP Morgan the other day. But by the end of the day, that candle was no longer a doji. I don't even know which candle it was, but it was somewhere right in here. Maybe it was this one. I don't know. But it was a doji. It just, by the end of the day, they had rallied it up, and it wasn't a doji reversal candle, so. But it does look like it's gonna back test and then break down probably right after that. So maybe a little pop up here, back test, and then I think you're gonna break down. So these are on watch for sure for shorting. But we just need a little bit of price action to give us signals for a sell signal. We just don't have that yet. I mean, you could take this as a breakdown, but it's not impulsive, so I don't like it. You know, I need to see impulsive price action to tell me that there's institutional players behind the move, and this is not it. So maybe a backtest, and then we get a big impulsive breakdown candle, and that would be what I'd be looking for. Intel. That one was up on some news. I don't know if it's like a sale news with the private equity thing going on, or but I know it had popped. I don't see any bullish divergence on the daily chart. I don't really see any. I mean, you got some that's a divergent low right there for sure. Looks like it closed. I mean, this gap down, you know, that's resistance. So that's it gapped up to, or you know, it gapped up on Friday on that news right to the resistance level. You could short it. It's objective to short. I don't know. You might want to give it a little. There might be some momentum here. It's up 10%. After this big gap down like that, I don't know. I think they're probably going to try to run it into this gap a little bit. I've got this blue line marked out. Yeah, so that yeah, I would think they're going to run it up there to 24.79, maybe even higher, but 24.79 looks like pretty decent resistance, and they might try to fill this gap. It's a really obvious gap, so maybe they can't fill it, but I think they might try to make a move towards it. Yeah, I don't want to short this thing. I don't want to be long it either, but you could go long on a break above this 22 area. And, you know, 11% up to that big resistance level. All right, Nvidia, covered Nvidia, covered IWM, and Palantir. Okay. I think we looked at this one last week. Yeah, so let's do it. See, there's the lines that I had marked out. I haven't changed that. So, I don't know. Looks like it's still following those little marks that I made up to resistance. That's it. I think, you know, I didn't change this line. I haven't looked at this stock because I'm not really actively trading this, but you know, again, I think it's going up there and then gets rejected, but okay. You have negative divergence on the daily. Yeah, you do. So maybe another divergent high, but it will be a divergent high. So probably going to get rejected. Vanex Gold Miners. That's GDX, right? That's the yeah. I mean, you have negative divergence on the daily. It's very obvious. It's look, see the PPO. It's starting to turn. It's almost going to do a crossover. It hasn't done it yet, but you've got the negative divergence on both momentum indicators on the daily. So I don't know. Maybe you're going to push up, pop up here, but it's diverging. So it tells me, I don't know about the low there. It tells me that we're going to get rejected. If I go down to the weekly, because I know the weekly is important on this one. See the weekly, this is coming off August 2011. And then we got reactions there. That's close enough. You know, I could maybe even move my line a little bit. But in general, it looks like looks like it's going to be a false breakout. It's not an impulsive breakout. And so I don't like it as a long play. With the divergence intact, weekly divergence too. I don't like it as a long play. I look at it more as a false breakout that's likely going to get rejected. So we'll see. Oh, and then the dollar. That's the other thing. If you're trading gold, you want to keep an eye on the dollar. You can use the dollar futures or the DXY, but I know on the hourly chart we had a breakout on the dollar. Right there. Resistance. Kind of a move right in there. And then breakout. And the momentum. Yeah, momentum looks okay. It's not necessarily diverging on the hourly. Momentum. It looks like a breakout that's gonna stick. And so that tells me the dollar is gonna push higher up to this level. It's about 102.11, 102.10. That's where I think the dollar's heading. As the dollar moves higher, you should see stocks come down, you know, because they're kind of inverse to the dollar. So, and especially gold. And so with the GDX, you also want to look at Newmont because that's kind of the big dog. On the daily, you have a daily support level. Okay, so that's the major support. And then on the hourly, they're starting to chop through it. So the hourly, I had this one, but it's been violated. I don't know. You probably want to move it down. Something like that. Again, low volume week, so it was really choppy. We're getting false breakdowns, false breakouts. Last week, it was a big mess. That's just the algos and the market makers just running stops and playing games in a low volume market. They won't be able to do that as much when the volume comes back. Something like that. A break of that should go down to the major support level, and then you break that, and obviously you got a more major sell signal. Disney. Back on the daily chart. Just trying to clean up my chart. I do a lot of markups in all these videos and just as I'm charting stuff. So you have bullish divergence on the RSI daily, but you don't have it on the PPO. You see the momentum's dropping here. So that's a lower low in price and a lower low in momentum on the PPO, and it looks different on the RSI. So mixed bag on that one. I have this as a potential trend line, but I only have 2 reactions, so I wouldn't trust it until I saw a 3rd reaction. I wouldn't trade off of it. I don't know. I don't like it. Not as a long play. I mean, I'd be more looking for a short, but it's not a great short either because it's kind of already been washed out a little bit. But I think it heads down here, 79.50. That's COVID lows. I mean, look at that, guys. COVID lows. And there's another reaction. There's 2 reactions down there. That's where I think it's going. To me, oh, and there's another reaction. That looks like long-term support. And that's where I think it's heading. So I'd be interested in being a buyer down there at 79.38. I like that as a long. As long as there's divergence and things that actually give me a sign, but I like it down there. So that's where I think it's going as of right now, and that's a drop of about 11%, 12%. If I had to pick long or short, I'd want to go short. But it's not my favorite short either. All right, so that's that. Newmont mining. Oh, Nucor, not Newmont. These guys do steel or something. I don't. Yeah, they do steel. Resistance in a downtrend. Closing basically at resistance. So no signs of a breakout or a buy signal. Building bullish divergence on the daily. Okay. So you definitely have more of a long setup, but no buy signal. So I don't want to short this thing. I don't want to be long because you don't have a buy signal. You just have a condition of divergence. So it tells you, okay, look for a buy signal, but there is no buy signal. So a breakout of resistance, and you'll start, you should start pushing up towards, the 200-day, that looks, that'd probably be my target. I'll push up to the 200-day. Okay. More steel. Is this the same person? Somebody likes steel. Alcoa. I think this is the largest steel company. Or maybe X. Which one's X? US Steel. That might be the largest. Nice support line right there. I don't need that anymore. Don't need that anymore. Don't really need that anymore. Okay, so there's my support. Very obvious for reactions. So well-defined support. You're battling with the 200 right here. I don't see any real indication. Like, I don't want to be long right at this level. You're below the 200-day. You're in a longer term downtrend. Okay. You've been making lower highs and lower lows since this thing topped out in March of 2022. Oh. And can't really make a trend line there, but go down to the hourly. Something like that, I guess. Really, there's the low, but it's about there. Right there. Breakdown and a back test, and I think it's rolling over down to that major support. So I'd be more interested in being long down here. Okay, that's a nice objective long area, about 28-ish. And that's where I believe this is heading. Yeah, I can't make a downtrend. So that'd be my best guess. Back down to the major support level. You might even break it. I mean, you've had 4 tags of it. It's not objective to short down here. If anything, I'd be long for a bounce. You probably get a bounce. And I'd short on a break of that level. So that's it. Okay, what else do we have? Only see safety in gold miners. Been trading AM for years. The stock made me fortunes. Trading options. Yeah. Yeah, that's cool. I mean, you know, everybody's got their own style. I don't do options. You know, it's just an added layer of uncertainty with the time element. So I just don't do those. But and you can sell premium and all that. There's different strategies around that. But yeah, there's not really safety in gold miners. I mean, if you really go and look at, well, I mean, just like, I know like Newmont. I think this thing's been going sideways. Yeah, I mean, it's not really gone anywhere. Bottom back in 2016, but you know, long-term bottom down here at 30, and yeah, I don't know. Wedging. This has been wedging, so it's an undecided pattern. So yeah, I don't have them in like a long-term. I don't have them in a bull market right now. I mean, it could be soon. We'll see. We gotta watch the dollar. All right, so Snap. This one is prone to huge gaps. Snap on earnings. It happens all the time, like big 20% gaps, and it does it on earnings. It's almost like guaranteed that like this is a daily chart. There's earnings. There's earnings. There's earnings. So it negative divergence, gap down, bullish divergence, divergent low, gap up, negative divergence, divergent high, gap down. So yeah, but you know, so who knows right now? I wouldn't touch it. I mean, you don't even have a divergent low yet, so I suspect you're going to go put in a new divergent low, and then maybe you can gap up on the next earnings. But maybe they got to get down and put in a divergent low. So I would just leave this one be personally, and see how the chart shapes up. Dell and Tesla. Okay, so Dell. This one I think has a little bit more upside to go. Yeah, I like it as a short because you've got a very distinct trend line. It's a really obvious trend line, so I wouldn't put it past the algos to maybe pop the trend line a little bit to run stops. Resistance, resistance, resistance. To me, I think it's gonna go up to the resistance, and then I can easily see him kind of popping that a little bit, run a bunch of stops, then fail. So one way to do it is you could take a half position at resistance and then wait for a rejection candle, because the way it could go down is you get up to resistance, you take a half position, they're going to pop it, or they could, and then, you know, so be aware of that. And then I wouldn't add till I saw some sort of a rejection candle. Big breakdown, big red candle, reverse doji, outside day, something that tells you, okay, likely that was a false breakout and a stop raid. And then if you see that, you could add to a full position, and I think you're going to get a runner to the downside. So keep an eye on that one. I like it as a short. I could easily see that little stop raid kind of trick play on people. And then what was the other one? Dell and Tesla. I don't know what Tesla's doing. I think it's going lower, but yeah, I mean, I think it's going lower. It's in a downtrend. It's been in a downtrend bear market since November of 2021. Lower highs, lower lows. I think you're going to go make a lower low or an equal low. I do believe I think it's heading down here, down to 62. Just might take a while. Little false breakout there. See that? Resistance. They pop it up, but they pop it up on negative divergence. There's your clue. Telling you, okay, high likelihood this breakout's going to be faded. Big reversal candle. That's like what you want to look for, is like a big rejection candle. That's a nice candle. Tells you, was it an outside day? Kind of. But you could have like set a stop above the high of that candle and said, okay, this is a big rejection candle. If they can take this candle out, then I'll stop out. Otherwise, you short, and that worked out. So whether they want to go back up here or maybe even test this trend line, because this one I have here only had 2 data points, starting to get violated, so it's not really my favorite trend line. I could even get rid of it. But resistance is up there. And I think you head lower. This will go down with the market, so triple Qs. Whenever we get some sort of reversal and downward price action, this thing's going down too. You're long and short. Okay, so you're just working premium on straddle. Someone says they're long and short Intel, so that's a straddle. I think that was what they call that in options. Baba. I know they had some positive news. I saw the headline, but this one's been kind of a choppy mess. There's support. Momentum's moving higher, price action's moving higher, no real divergence. So I would just go with the trend, which is a upward moving trend. I don't see anything else really. You've got some resistance right up here. So yeah, I'd say we go. As far as I can tell, you go up there. You're probably gonna pop it, and maybe you put in divergence, maybe not. You have to see what it looks like there. But I would just go with the trend right now. I don't like buying it here. I like buying it down here. Too high of a risk for me to go long right there in the middle to try to capture. The risk reward's just not favorable. Like it's like a 50-50. Like if okay. 6-7%, maybe they pop it, maybe they don't, so maybe an upward of 8% or so for reward, and my risk to the downside is 8%. It's a 50-50. It's a crapshoot, black or red. It's not. I don't have an advantage there, so I don't want to take that trade. That's my not at this current level. But if you're already long, then I think you could probably stay long. Abercrombie and Fitch. That one went down, right? Didn't it have a... Yeah, there's a big rejection there. So again, resistance. This is the line I had marked out. All right. This was support. We broke support. Had a nice plunge. Rallied back up into resistance. Traded there for a week or so and rejected. So this one's going lower. I would put really good odds that it's going lower. In the short term... maybe they want to go fill the gap or whatnot. But in general, I do think it's trending lower. And starting to put in maybe a potential trend line here. So I would use that trend line now as our, it's objective to short at the trend line as far as I can tell. There's no divergence. You've got momentum moving down. You have price moving down. It's a downtrend. Sell the rip. All right, so I want to short this trend line, and I want to short resistance levels. Okay, gold miners. Let's see here. Redfin. I don't remember. Is that FI? Which one is that? RDFN? Yeah. I haven't looked at this one for a while. Kind of a real estate play. Support. So breakout, back test, and a run. You know, that was a buy signal. Did you have bullish divergence? That's something I always look for. Started to have it here. You only had it there. So, but momentum looks decent. You know, that's higher highs in momentum. So this push higher, there's you know, that's decent momentum. Volume's not too bad in the background on this push up. So, you know, I don't see any signs on the daily chart that tell me this is a screaming short. At least not yet. It, you know, let me see here. Yeah. No, I don't like that. But, you know, there's your support down here. There's, you know, now if you came down, which you could come down, I don't see any real divergence on the daily telling me we're going to come down, but, you know, you always, you know, you can always extend. The long is down here. I like the long down here around $6 or so, this trend line. I don't see a short on this one, at least not from a trend perspective. Let me look at the hourly. I mean, yeah, the hourly, you've got a potential short you can trade against. I only have 2 data points, though. I don't know. I don't love it from a short. It's not a short to me. I'd be more interested in a long or just let it be. But I want to be long maybe down here. I don't want to buy it way up here. All right, so that is that one. I'm going to do just a couple more, and then I'm going to wrap up, guys. Hopefully you're finding value. If you haven't hit that thumbs up button, clicky, it's supposed to help the channel, I guess. Yeah, milking premium. That's cool, man. There's nothing wrong with that. If it works, it works. And especially on like a low volume sideways market, like especially like what we had last week, just premium decay basically. So those selling premium are the ones who are generating income during kind of sideways markets. Crowd. Let me get rid of this trend line. I don't need that one. Let me see if I can make anything off the lows here. Yeah. I'm gonna go with that. Oh, you could drag it down to capture the lows here. It could be either that or up here. I benefit of the doubt would say it's there. I only have 2 data points, but you're capturing kind of the lows. And yeah, so I think this one is sell the rip. All right, you're in an uptrend. All right, that uptrend, as it extended, you started to put in negative divergence that extended for quite a while. Okay, and then, I mean, you got the initial strong push down. You're getting a counter trend rally. I think it's in a downtrend, which means sell the rip. So you've got the 200-day overhead, which should act as resistance. I think they'll, they might test it. They might pop it above for a day or two. I wouldn't count on it holding. And maybe a downtrend line right there. Or let me kind of clean that up. Actually, it's basically right there. If we go down to the hourly, see one reaction. There's a couple there, So maybe it could be at resistance basically. Mark it right there. I mean, it's not favorable to be long this anymore. I think it's more favorable to be short or to be building a short position. And that's what I'd be looking for, is to be building a short position or add to it as you get more signs. Because I do think it's probably about to continue the downtrend. Bull trend here. Okay. Bull trend's broken. Downtrend. All right, one more, then I got to wrap up. Let's see here. Two people want Nike. Could look at that one. I don't want to do the gold royalty thing because that's, small. I kind of already covered the gold stocks. Let's look at Nike. I know that one had some bad earnings. Yeah, see the big bad earnings. I've got a level here that seems to be a resistance level. And then you've got the gap. Both of those levels are relevant. It's clearly in a bear market, and that's the thing. There's a ton of stocks that are in a bear market that it's just like these tech stocks that are kind of keeping the market propped up, but there's a ton of stocks that are in a bear market. Yeah, so I got resistance about 88.61. I don't know. Kind of looks like they want to keep this thing, push it up, hit this resistance, and maybe run up and hit this downtrend line or fill the gap. That's kind of, and then continue to roll over. The 200 days right there. See it kind of with this trend line. So kind of looks like they want to, like it's going to push up a little more into some more resistance. It's not really at any resistance right now, so I think it could continue to push up. Earnings coming out soon, so could be like maybe they pop it on earnings right into that resistance. I don't know. I honestly, I would be long, but I'd probably, I don't know. I don't know if I'd want to be long on earnings because it could go either way. But probably give it the upside bias until you can get up into these resistance levels. It's just kind of, from my perspective, nickels in front of a steamroller a little bit. If you're active trading it and you're able to kind of watch it on a daily basis and get in and out, then you can do that, because you got maybe 5% up here, maybe 11% up there. That's kind of the upside that I see. And then probably more downside. There's your long-term trend line that I've got, and that's been broken. It broke on this gap basically. So they could, yeah. If I had to lean one way or the other, I think they're going to push it up into this zone of resistance, and then it'll start to roll over and make its next leg lower in what looks to be an ongoing bear market for this stock. That's all I got, guys. Enjoy your weekend. I'll catch you guys on Tuesday. All right, take care.